Vinaka, and welcome to this webinar from FRCS team. I would like to welcome you all to be part of this learning. I think we are here to learn national budget policies as well as the reform that's currently happening in the area of taxes and customs. As a general introduction, I'd like to first of all acknowledge presence of a large audience. We have about more than 300 people joining us online. So first of all, thank you very much for joining us and really appreciate your time. We'll make this session very productive and make it very educational as well. We also have a number of students that have also joined us within the 300 number that I have mentioned. We got accountants, lawyers, we got bankers, students as well. So I'll make sure that my delivery is very interactive insofar as you are free to send your questions via chat, and we got a panel that's going to respond to you immediately. And of course, at the end of my session, and as I go along, I'm going to make a reference to some of those questions as well and respond to that. And also, I'm going to also ensure that that the presentation is understood by all audience. We do have technical people in the room, accountants, lawyers, and so forth. And I think text would be easy to understand for this category of valued taxpayers or stakeholders for FRCS. But we also have students as well, so I'll make sure that is very interactive. Okay, very briefly, I think before I go into the national budget presentation, just one slide to set the scene. I think when you talk about tax reform in any economy, in any country, there are certain fundamental consideration that goes behind in the design of any tax policy, and Fiji has been no exception. And I must say that we had been reforming our tax system in a significant way, especially from year 2012 when there has been significant tax cuts. There has been introduction of new regimes. We had CGT, we had FBT, we had new tax act that has also been introduced. But from the tax policy viewpoint, some of the major summary that we could share in this slide that I can share with you is that broadly our tax system is being designed as a low rate and broad based. So essentially anything or everything that needs to be taxed should be taxed, but at a low rate and with exceptions and exemption to those who are vulnerable from such tax in the society. And again, the tax reforms have seen that the attempt was to broaden the tax base, and I'll talk about that in more detail. I think the second bullet point is equally important to start the discussion with. So in the formulation of any tax policy in any economy, anywhere in the world, so the first question is, what is the equation to have a tax policy or to design a tax policy? Is there a mathematical equation out there? Is there a philosophical equation out there? Or is there any equation out there? But more broadly, economic literature and public finance literature tells us that the best tax policy is the one that strikes a balance between what we call economic efficiency and equity, and at the same time, it is exhibiting the principle of simplicity. So what does it mean? For example, there's a desire to collect maximum revenue. So that's about economic efficiency. But on the same token, it should be balanced with the equity argument. For example, those that are vulnerable from such taxes needs to get the exemptions and so forth. And of course, there has to be a situation where any tax policy or for that matter, any tax policy, say in Fiji, when being introduced, it does not create any form of distortions anywhere in a tax system. So that's what we are saying: efficiency and equity balance. And I think simplicity is clear. So whatever the tax policy, the administration is equally important as well as the tax policy. It has to be simple. It has to be well administered, and that's what we're talking about: simplicity. And that comes down to the drafting of laws and so forth. Okay, so that's a high-level statement that I've just made. If you look at Fijian tax system generally, in 1 or 2 minutes, let me summarize it for you. So, is our tax system soundly based? I think that's a good question. The general answer is that yes. If you look at income tax regimes and CGT regime at the present time, it has been developed, it has been designed based on the international best frameworks. We talk about the worldwide income tax system, and if you look through our Section 14 of the Income Tax Act, in particular Section 14.2 of the Income Tax Act, it clearly states that when we're discussing tax position on a resident taxpayer, then we look at in terms of worldwide basis. And similarly, if you look at the CGT provision that we have, it also makes reference to what we call Fiji assets and foreign assets and so forth. So in terms of VAT, I think VAT is, again, there have been many types of VAT systems around the world throughout its evolution. VAT can be income-based, VAT can be consumption-based, VAT can be production-based, but the general philosophy, the general global trend that we have in Fiji, that we have at the moment around the world, and that we have adopted in Fiji in 1992, is that VAT is based on the destination principle. So it is a jurisdiction, the destination where goods and services are consumed. It is in that jurisdiction, it is in that destination where we have to impose VAT. And of course, some may argue that by removal of the VAT reverse charge provision, as it was before in the section 21 of the income in the VAT Act, it is still there, but we're talking about the registered VAT payers, so there is no element of VAT reverse charge. So some may argue that in terms of destination principle, the import of services in Fiji at the present time is not subject to VAT. I think that's an argument. But broadly speaking, our design for VAT has been low rate, broad base. Rates have come down, the base has been broadened, and there has been a significant drive towards simplification. And I think one example of that would be the introduction of the online system for us to ensure that we administer the VAT regime. So there's the overall principles of taxation. From administration side, again, there are several regimes being introduced. PAY is a final tax that is already in place for income tax, in particular the in terms of salary and wage income. FRCS is currently moving in a direction of income tax self-assessment. It is already in the law. Tax Administration Act has been amended. If you look at in terms of, say, CGT, CGT at the moment is a transaction tax. It is based on low rate, but certainly there are, and there will, just like in any other tax, there will be future opportunities for reform. For example, if you look at CGT at the present time, it does not provide for the offsetting of in terms of capital losses. So in any case, like tax is as an important point that we need to know is that tax is a product of the political process. So I think tax is something that has to go through the political economic consideration, and that is important. Whilst the policy needs to exhibit simplicity and on those features that I have mentioned, ultimately it should ensure that it goes through the political process, and then certainly in that process there are views, there are consultations, there are element of partnerships, there are suggestions, and I think I must say that in particular last 3 years we have made significant headway in reforming our tax law. For example, I can say submissions from Fiji Institute of Accountants, tax agents, and a number of tax practitioners has been very useful for us to reform tax laws. And some of those you can see on the screen at the moment. For example, if you look at the major changes that we have just seen prior to the budget, prior to this budget that got announced last month, we had long-standing debate on the FBT deductibility, because fringe benefit tax had been a cost to the employer, but they were not able to claim that in the tax return. So that has been sorted out. Prior to this budget, prior to COVID budget, we had 50% deductibility only allowed for superannuation, FNPF. As you know, that Section 23 of the Income Tax Act provides for tax deductibility for contributions made by employer to FNPF. So in that regard, the rate used to be 50%, but through our reform initiatives, through simplification, that has been done. The other one I can highlight, like rather than going into detail for everyone, because this is already out and we all know about it, is in terms of offsetting of business losses. So I think if you recall the history of it, PAY as a final tax was introduced. The desire was to simplify the PAY tax regime so that so that our payroll officers can deduct that tax correctly, limit to FRCS, and that's it. And there is no further adjustments and amendments. But with that came some unilateral rules around. For example, if an employee is having any business income and it makes loss, so in the situation that was not allowed. But now we have at least we have removed that particular rule, although at the present time we have a cap around it. So broadly speaking, just in one line, this particular slide is just giving a picture or giving us some evidence and giving us some validation that even prior to this budget, there has been significant reforms to the overall tax system. And one of the significant one, perhaps then I can mention before I jump over to the next slide, is in the area of major tariff reforms in the last national budget. major tariff reforms have seen, as you know, that 1,942 tariff lines. If you flip to the Customs Tariff Act, we have so many chapters in the Customs Tariff Act, starting from live animals, it goes on. So every particular item that is imported into the country will have a tariff classification. So in the last national budget, I'm talking about last year, there was a dramatic change. There was a paradigm shift where rates have reduced. Okay, so this is just to set the scene that there has been a lot of progress being made. But on the same token, we do acknowledge that a lot of things can be improvised further in the area of tax. And I think FRCS is working hand in hand with the tax-paying community to ensure that we bring reforms, either at the policy level or at the administration level. So let me start off with the national budget presentation, just giving a one slide show on some of the reforms that we have in the area of tax incentives. So Fiji's tax system is has been characterized as one which exhibits a wide range of tax incentives. If you look at our tax system now, we have a wide range of incentives for virtually every sector. This national budget have introduced significant reforms. For example, the one that I want to talk a bit more in detail is in the hotel investment incentive. As you know, that tourism is very critical. We need to support tourism. There has to be fiscal policy reforms. And this particular budget have seen now the existing hotels also being eligible to enjoy the tax holiday provision. Like if you look at the history of the hotel incentives was introduced in 1964 as Hotel Said Act, and over time it went through transformation. Then last 5 years prior to COVID, the focus was more in terms of new hotels. And I think, and then after COVID, we have seen the impacts, and therefore what government has decided, and certainly is in the area of trying to ensure that existing hotels are being supported. And in that regard, there are bold incentives that got introduced, 5-year tax holiday that is there for any refurbishment and renovation of an existing hotel. So if there's existing hotel out there, so they are eligible for that. But the most important one is in terms of replacement of inventories, replacement of amenities, or rather improving amenities and so forth, and that may require importation of certain goods out of Fiji. And in that regard, certainly the budget policy is clear. Everything is duty-free for the next 18 months. How it is being administered on the ground, we do have what we call a Code 235 in the Customs Tariff Act. If you want to know all the details of customs duty concessions, it is being very well laid out in the Customs Tariff Act, that the thick book that contains the rates of basically anything and everything that is imported into the country. And we do have at the back of the legislation several customs concession code. Okay, so I thought of just to introduce or try to use an example of hotel to state in terms of the intensity of the incentive that was introduced. So hotel incentives has been significantly modernized towards new existing hotels, and along with that, what we see on the screen is the investment in ICT park incentive in terms of recycling business and so forth. So what we see there, the instruments are the same. It provides tax holiday, it provides duty concession. In the case of hotel, it talks about investment allowance. So what is different in terms of tax holiday? So what is different is that now the budget has introduced a number of tiered approach. So for example, investment from say $250,000 to $500,000. So that is also now eligible for an amount of tax holiday. So rather than having a structure that is more towards in terms of high value investments, I think there's acknowledgement that we need to create a fair regime, and I think that's what we have done in the budget. At the end of the presentation, I'll run through with the budget summary as well with you, and I'm sure you will see that the tiered approach is being simplified, and it is now more accommodating to smaller investment as well. And if you look at on the other side, the maximum tax holidays now, you can see tax holidays, for example, in terms of network cabling. I think this is a large capital intensive type of investment. But if you look at ICT park and so forth, investment, recycling business as well, it goes as high as 20 years. Even for hotels, in now new hotels, it goes as high as 25 years. Historically, as I've said to you, we had what we call before half slip and full slip. Now there's only one slip. It basically means that investment level and a tax holiday. So we don't like distinguish in those in level of investment as we do in the past, but now it's clear, a simple investment table and so forth. So how to use these incentives, how to access the incentives? There is a regulation that has been gazetted. The regulation is already gazetted. It's on the FRCS website, and at the end of the presentation, I'll show you some of those regulations. So regulation certainly is saying for incentives, there has to be an application, there has to be a provisional approval for a number of tax holiday provisions. Then after that, there's a final approval. But I can give assurance to all of to all the audience that FRCS is now moving towards facilitation. We're going to ensure that we intensify our role in helping the business community. We are all one team. We have to ensure that when applications are received, it's being dealt with promptly and so forth. We had a number of meetings, for example, with other industry stakeholders such as the Hotel Association today, and we had shared the similar sentiments as well for us to partner, work together to resolve things. Okay, now let me talk about some of the other technical policy issues that was announced in the budget. So we have something called commercial debt forgiveness. Okay, if you look at the way the income tax operates at the moment, if you flip to the tax laws, we have section 13 that talks about chargeable income. So income tax is imposed on the chargeable income. The authority to impose income tax is coming from section 8 of the income tax act. There's the authority. And then how to do it? It's chargeable income. And chargeable income is, as we can see, is gross income minus allowable deduction. Gross income is in section 14. Allowable deduction is in section 21. So there's a mathematics around it. But within the definition of gross income, our laws are saying, are defining it further, different classes of income. Employment income, section 15. We've got business income, section 17. We've got property income, section 18. And of course, if the income that has been defined elsewhere in the law, that is also forming part of the gross income. So debt forgiveness or commercial debt forgiveness is a situation where there is an exchange or there's a borrowing between two associated parties. So associated parties, what do we mean by that? Generally, they are related parties, and it is being very well defined in section 4. So what happens when there's a borrowing between the two, company A, company B, they're associated, and there's a borrowing that has taken place, right? So that's okay. But what happens is in the event, as part of the repayment cycle or at some stage of repayment cycle between the companies, the company B has to repay to company A. If the debt gets forgiven, meaning that like the company A has just said that, okay, please don't pay me back, that's it, you can keep the money. From taxation perspective, that particular forgiven amount is added back to the income and it gets taxed accordingly. And I think from the broader taxation principles and policies, and we have also tested this provision in court as well. So I think it is something that is not peculiar to Fiji. I think these are generally being looked at from the perspective of domestic transfer pricing, trying to look at compliance side of things, trying to look at tax planning and things like that. But in the national budget, what we have noted, and I think, and what we have also supported, and there's a good submission from the stakeholders, is to ensure that the debt forgiveness rule is being relaxed. When I say relaxed, it means that when debt is forgiven, it should not be subject to tax. If you recall, in the COVID response measure budget, then we have other budget last year. So we had been extending this debt forgiveness provision. So what does it mean? In summary, there's a borrowing between company A, company B, they are associates, and at some stage the debt gets forgiven because, as we know, current situation, hardships in terms of repayment, difficulty, and at the moment it's very difficult to access finance as well, and we all know that. So from tax perspective, it provides a relief. So section 17(1)(b) in particular has been amended to ensure that firstly it allows time for debt creation. So by end of this year, so there is an opportunity to engage in that particular borrowing, and by end of next year and up till by next year, if the debt gets forgiven, then FRCS will have to ensure. I mean, not ensure. FRCS is not authorized to ensure that that income, that forgiveness amount, is being added to the income and it gets taxed. So there are basically macroeconomic reasons why we need to have this change. And it's also basically to allow greater access to finance, and also to ensure that there is a cash. We manage the cash flow provision. Before I go on to and talk about the next one, I think on this one, there was another similar amendment that was done to our tax law last year, and that was to do with what we call thin capitalization. It has similar principles. Thin capitalization, meaning that when we have a resident company, we have Fiji control, there's a company in Fiji that's controlled by offshore entities. So when there's a similar borrowing that happens between the two, so what thin capitalization is saying is that it's talking about thin capitalization is something that we can see in section 62 of the Income Tax Act. It's simply saying, if the borrowing is taking place from an offshore entity into Fiji entity and they're related, then when it comes to interest deductibility, and if the amount is not arm's length, then the amount of interest that can be claimed for tax purposes is being restricted by looking at the debt to by looking at the debt to equity ratio. So it used to be 2:1, it went up to 3:1. So now it allows for greater tax deductibility, but that's the tax impact. But the bigger picture is that it allows for companies or the local companies to also borrow money offshore with that relief in taxation. But we know that the history of thin capitalization is more in terms of transfer pricing kind of discussion. It's more towards if you look internationally as well, OECD, IMF, World Bank, whichever institution you look at, even European Union, they're talking about these things as well, is base erosion, profit shifting. So just trying to have initiatives around the world, globally, to restrict movements of funds. But we're looking here things from perspective of Fijian economy. We need to simplify laws, and we have done. Let me talk about the next policy measure, the important one, and I think people might be interested to know about it, how it actually works, where it came from. So withholding tax on professional service fee. So at the moment, if you flip through our Income Tax Act, Section 10, subsection 4 presently has a provision which allows for the imposition of for the 15% of 15% withholding tax on professional service fee. Good. And so broadly, what is being done here, FRCS has been imposing this withholding tax by looking at the domestic provisions. In the old legislation, Section 8 and 8A of the old Income Tax Act, that is Income Tax Act prior to 2016, it gave legislative authority for Fiji to impose this tax. That's good. But then we do acknowledge, we do know that we do have a double tax agreements, and double tax agreements is allocating taxing rights between two states. So we got two states: country of source, where income is sourced from; country of residence, where taxpayer resides. So when it comes to professional service fee, in particular, Article 14 in independent service fee, if you look at DTA with Australia, it explicitly says that income derived by individual who is a resident of one country shall only be taxed in that state. So meaning that, as I've said to you, double tax agreement, it allocates taxing rights according to different classes of income. So when it comes to business profits, it can be taxed. It will be taxed in the source country. For example, we have businesses from overseas. They are set up here in Fiji. This is where the activity takes place. The degree of permanency is here. So we have the taxing rights on that particular income. Of course, we look at income on Fiji source income. But in terms of dividends, interest, royalty, basically these type of passive incomes. So this type of income is generally shared between two states. So we got royalty provision in treaty. Of course, we got dividend provision in treaty as well. But by virtue of domestic tax policy, we are not imposing a tax on dividends and so forth. On the same token, the double tax treaty can have, just like if we have seen in this situation, explicit provision where we cannot impose tax on certain types of income. And it can be argued that the income is derived from Fiji, but Fiji is not able to tax it because of DT. And that's okay. It's a fair comment. But equally, double tax agreement is all about negotiation. It's all about fostering investment and trade in the economy. So I think it does not mean that by losing few millions in revenue, then everything is doom and gloom. No, because it gives it creates a situation where investors feel a bit more certain to invest in the economy. Trade and investment argument. So in the national budget, what we have, what has been announced by the Honorable Minister has been that firstly, this issue has not been resolved. When I say issue has been resolved, I'm talking here about number one, FRCS is not going to impose this professional service fee where not permitted by the treaty. Some of the double tax agreement that we currently have, it allows for the imposition of professional service fee. For example, if you look at India and other treaties as well. So in that case, what happens? So the taxpayer is not disadvantaged. So it means that 15% is being uplifted here in Fiji, and that same 15% is allowed as a foreign tax credit in taxpayer's home country in India. Good. But in case of Australia and New Zealand, that is being explicitly not authorized by the treaty. So going forward, and even as I speak on the ground, this particular tax is not being imposed by FRCS. We had a comprehensive session with our staff and the team, and we have drafted a standard interpretation guidelines, trying to give more clarity in terms of in situations, as I've just mentioned to you, in treaties where it allows to be imposed, so we'll continue to impose. Where it is not, it should not be imposed at all. And when we talk about countries to which we don't have a double tax agreement, then in that situation, our domestic law remains. So that means this tax will be imposed. And just like in any tax jurisdiction, and we are not any exception, every country will have their own foreign tax credit provision as well, so that they want to safeguard their citizens. If they pay tax offshore, then they will give a credit. So point number one is that there is no imposition of this tax anymore. Number two is that when it comes to refund, certainly money has to be refunded, and the approach has been we just like with Australia and New Zealand, in any treaty, even in any model convention, there is always an article called mutual agreement procedure. Mutual agreement procedure is generally a article that is going to allow a mechanism to resolve any tax disputes. So we have also used this particular mechanism with our partners in Australia and New Zealand to resolve that particular issue. So the point being, when it comes to refund of this amount that has been deducted by FRCS, when it comes to non-residents, so we have to follow that. We have to follow the door. So application has to come from like through that process, mutual agreement process, and our competent authority, Australia and New Zealand, will also validate and verify the claims. And FRCS is going to ensure, and I can say we already started refunding amounts already upon the legislation getting gazetted. So the point being, we will facilitate all the refunds that needs to be done. When you talk about the local businesses or the resident taxpayers who have paid tax on behalf of the non-resident, maybe because we didn't have much bargaining power, so the tax has been absorbed domestically, and in effect it has become like a cost to local economy. But we also acknowledge that in the tax returns, that particular tax that was paid has, in some cases, has also been claimed as a deduction, because Section 22 of the Income Tax Act, which is a provision that restricts, that says that which deductions are not allowed, it does not include withholding tax. So technically, we have seen people who have claimed this deduction. So now when it comes to refunding the amount back, the full tax back, so we'll go to the assessment, the review. If anybody has already claimed this tax in their tax return and they already got a relief of 20%, because 20% is a benefit that must have accrued, then again we'll manage the other 80%. But the message is that we're going to facilitate promptly. The process is for local taxpayers or resident taxpayers is to make an application to FRCS, attach all the documentation, invoices, receipts, and so forth, or any information out there to support the withdrawal. So in terms of the timeline, so for resident taxpayers, there is no particular timeline, or any application that will be received will be refunded. And I think if you look at our Section 33 of the Tax Administration Act, which already provides us the authority to impose refund in any case, generally we have powers on that. But I just want to give assurance to taxpaying community that there is no timeline. It has not been even written in the law that we have drafted for the budget that will only go up to a particular point in time. However, when we talk about non-residents, in order for them to use the mutual agreement procedure, there is a timeline for up to 3 years from the date of notification. But that is a process that will be managed by our competing authority partners of Australia and New Zealand in particular, because those are two countries where we have seen a dispute. But from our perspective, whatever claims is being received by FRCS, it will be promptly attended to and refunded. Okay, so I believe that was a somewhat detailed explanation, but I'm sure it was useful to talk in more detail because this is a very technical area as well. In terms of the law, Section 33, subsection 7 is now being introduced in the Tax Administration Act. Basically, what it does, it gives certainty, it gives clarity as well that yes, Fiji is going to make those refunds. Because the other argument has been that we have to resolve this issue ASAP because we want to renegotiate our double tax agreement with Australia and New Zealand. And I think one of the topical area within the treaty negotiation that will be when the negotiations start is to look at the tax sparing provision. For example, Fiji is offering a lot of tax incentives to non-resident businesses, non-residents. So the point is that if we are giving tax incentives here, it's all tax-free, tax holiday. The moment it goes in their jurisdiction, or which you call like the moment it goes in their country of residence, then it gets taxed, unfortunately. But we had in the past, even at the moment, we do have a tax sparing provision, but it has expired. What we say tax sparing means the tax gets spared. It doesn't get taxed anywhere. It's supposed to be taxed in Fiji because of incentive. It is not being taxed. So we want the same recognition as much as possible in our negotiation to be considered by our treaty partner. So I think that's a proposal, but certainly we'll walk through that. Okay, now very quickly on the budget changes, some of the straightforward, simple ones. If you recall, there was announcement on reserve funds. At the moment, Income Tax Act has Section 28, which talks about natural disaster reserve. The origin of this has been, of course, it relates to the tourism sector. We had what we call Cyclone Reserve Fund incentive for so many decades. When we did a rewrite of the law, that cyclone reserve has now been expanded to include any natural disaster. So what it does is it simply says where it talks only about companies. So when a company sets aside a particular amount of money, or more legally, when they put a money into an account in a financial institution, so when they put that money in the account, then they're eligible for 150% tax deduction. So that's straightforward, because by normal accounting rules, we all know that by simply putting money in the account, it is not a deduction. It is not an expense, so therefore it does not warrant a deduction. But in this case, to incentivize people to keep money in preparation of sustaining future losses coming from natural disaster, this tax incentive has been in place for so many years. What has happened in the budget? Now the budget is saying that now taxpayers can use that money to also manage their impacts, the negative impacts coming from pandemic, the COVID pandemic. So the point being, if prior to this budget, if anybody withdrew that money and used it for something else, then whatever deduction was allowed would be nullified. It means that now FRCS will add that particular amount back to the gross income and it will be taxed. But because of pandemic policy, pandemic reasons, this has not been allowed. The second issue that's coming out in terms of reserve funds is now the government is also encouraging people to also deposit money, to also keep money, set aside funds in a financial institution for any future pandemic affected by a pandemic. So it is not explicitly talking about pandemic, and let's hope there's no more pandemic in the future. But the reality is that the way the world evolves, there would be certain unforeseen situations. But in any case, our tax law is now also encouraging taxpayers to deposit money for future purposes. And I think if you look at the legal drafting, the legislative drafting on this, it's easy to identify which building has been damaged for the natural disaster. And then we can quantify an amount of cost and so forth. And so it is to do with a loss. But for pandemic, we cannot explicitly say it's a loss. We can say maybe they are still profitable, but the profit has come down. So that's why the law is very open, very flexible to say that sustaining a business activity. Okay, very quickly, the next one in the budget, the big ones I want to talk about now before I summarize it in the summary table. Export income deduction. Export income deduction, we all know it was introduced in year 2001, and upon the introduction of export income deduction, there was a repeal of the previous tax-free zones decree Before we had a particular tax-free zones decree in particular place, particular location, investment can happen, and as a result of that, there will be tax holidays, and provided that investment leads to export. So what I'm saying here is that in order to remove tax discrimination, I think one of the hallmark of the tax policy reform was to harmonize things, to remove discrimination, to ensure that all exporters are given the incentive rather than those in a particular place or in a particular zone. So now that has led to the introduction of the export income deduction in 2001, and over time it has been expanded. Initially, it was supposed to expire in 2010, but export is very important from macroeconomic perspective, foreign reserves and the like. So, but now in this budget as well, the incentive has been further incentivized to ensure that when we talk about agriculture and fisheries, and more recently, there was a bill before Parliament, and I can confirm the bill has been passed. Now we're going to incentivize further to also include forestry. So agriculture, forestry, fishery is now subject to 90% tax deduction from year 2023 onwards. And I think in relation to bill number 30, maybe I'll talk about that when I go into my next slide, which again is trying to ensure that we are reforming our CGT regime. As I've said to you, like tax is a topic, tax is a subject, tax is an animal, if you can say in that regard, in a humorous way, that is always subject to evolution and revolution, because the point is that we have to ensure that tax is always there to support economic activity, support business activity, and so forth. So let me go into CGT now. The amendment in the budget, the most famous one, and I think the most important one, is to do with Section 88 of the Income Tax Act. So what is that? So Section 88 of the Income Tax Act, initially when it was introduced in year 2016, was talking about corporate reorganization. And let me explain it with a simple example. Say we have company A, and now company A needs extra money, needs some financing. It goes to bank A, and bank A says, no, I can't give you money because you have your financial situation is not good. So then taxpayer goes to company B, and company B says, yes, I can finance it, but provided all the asset is under my name, is mortgaged under my name. So generally what I'm saying here is that this type of situation will lead to the creation of another company. So another company, so that in order for that particular transaction to take place, there has to be another company, because then this bank is going to pay off the loans, asset will be disposed to another company. So in more simple terms, what I'm saying here, corporate reorganization is talking about CGT deferrals. CGT will not be imposed when the transfer is taking place and the ownership between company A and company B is exactly the same. It's 100% ownership in company A by same persons, same individuals, same shareholders. Now they form another company, which is called company B. And now when the disposal takes place of assets, so that will not trigger CGT. So in more technical term, CGT is being deferred. So later on, when that asset gets disposed in the open market, generally, so that will trigger CGT. So that was the policy. But I think if you can look at the reorganization rules in taxation, it somewhat resembles well with the new Companies Act that was introduced in 2015. Section 14 of the Companies Act is now allowing for one member company as well. One person can form a company, isn't it? So from what we have observed in FRCS, so certainly there has been a number of conversions from sole trader into company, partnership into company. So it simply means that we need to ensure that the CGT deferral rule that is accorded to companies are now also being accorded to partnership and sole trader. So I think it's a very simple amendment if you look at it, but it can be a very technical subject matter. So what is reorganization? Reorganization is simply trying to change business ownership from sole trader partnership into a company, or from one company into another company. So when that happens, everything is, the shareholding structure is same, and that does not warrant imposition of CGT. So the budget has really expanded the scope. As I mentioned to you, now partnership is also included in that particular reorganization rule. And what we can also note when we talk about companies, the requirement was that there has to be what we call like a group company. There's a group company, and there are a lot of subsidiaries within that, and there's transfer happening within that. So there's no CGT. That's okay. But what happens when there's no group companies, and like, so for example, me and you, we set up we set up some companies, maybe for different investment purposes, but we are the same owners, or there's only one owner. The shareholding structure is the same. So prior to budget, when asset used to get transferred in this situation, in those situations, then it was not allowed. The CGT was imposed basically. So the policy has been to ensure that we allow for that. So in terms of how to utilize this particular policy, certainly, as you know, that this will require what we call like a text, like a determination and advice from tax office. So the recommended way is to make an application to the office of CO or FRCS, and then what we'll do is we'll analyze the application. Again, it's not very complicated, easy to look at the certificate of incorporation for both the companies and so forth. So that is going to allow for taxpayers to enjoy this particular incentive. So tax amnesty is very important that we need to know. In the national budget, there was a tax amnesty that was announced. So what does it mean? Arrangements for amnesty can be made within 3 months. So in any case, for any tax debt that is out to FRCS, we already have powers within tax law or Tax Administration Act, where taxpayer can make arrangement with FRCS. So arrangement can be made, case can be looked at. Based on the merits of the case, penalty can be waived, and so forth. So in any case, but tax amnesty is a total. It's like an announcement or an initiative that says that all the penalties will be waived. So just a point of clarification here: when we say all penalties will be waived, it also includes the audit penalty. So in terms of policy framework, taxpayers can make arrangement, as you can see in the legislation, within 3 months after 1st August. But we do know the difficulty to make actual tax payments. So that's why we have got a B here, 48B, 48 capital EB, that tax has to be paid prior to 2022. So we're talking here about, when you say tax amnesty, it's not like a tax amnesty for everything. Tax amnesty is only on amnesty on penalties, because if you look at the legislation, like real tax has to be paid unless it is being exempted by virtue of Section 20 of the Income Tax Act. And any income that is exempted is not part of the gross income and so forth. We all know that. So the point here is that now audit penalties will also be part of the equation. And in terms of audit penalties, Section 46 of the Tax Administration Act was also reformed last year. You may recall that we had amended Section 46. Now we got a new equation. The equation is simply saying that now the penalty will be based on the time value of money. The longer the default, the higher the penalty. But we have equally, just to bring some element of fairness in the regime. So audit penalties can also be waived, even without the amnesty provision. The legislation, Section 46, is saying that that penalty can be waived just like any other penalty. But we do acknowledge that audit might also reveal situations of fraud, in terms of serious like non-compliance. I'm not saying for everybody, not for everybody. We have a very good taxpaying community, but there are situations warrants that in certain cases a high rate of penalty needs to be imposed, and its waiver needs to be considered properly. But FRCS is going to ensure that we work in a more transparent manner. Of course, the tax law also provides legal redress to taxpaying community. If you look at Section 16 of the Tax Administration Act, tax decisions can be objected. Even tax decision includes even things like departure provision order, garnishee order, or any type of measures that were previously seen to be very draconian. But now it's fair. It's like a fair deal. But on the same token, we do have mechanisms through the court process. Tax tribunal is there, tax court is there, where decision can be challenged. And I think it's good to know, pleasing to know that taxpayers are using these avenues. Okay, now the next particular policy that I need to talk about is in terms of FNPF, in terms of deductibility. The budget is simply saying that there will be greater incentive given to the employers to contribute more. Well, of course, there's a statutory contribution of 6%. This needs to be paid by every employer, and also employees should also pay as well. So the point being, if you look at the taxation principles for FNPF or superannuation deductions, so it's basically, if I can just quickly show, if you look at on the left side of the screen, it's like own contribution is tax that you all know, but contribution that is made by the employer, that is on top of the statutory contribution, the contribution made by the employer to match our contribution or employee's contribution is also not subject to income tax. So employee is not being asked to pay tax on the employer contribution. Simply, that's what I'm saying. But when the amount is on top of the statutory amount, then by virtue of Section 15 of the Income Tax Act, that extra contribution is deemed to be, or is seen to be, or it has been ruled to be what we call it belongs like cash fringe benefit. So it forms part of the employment income and it gets taxed. So as part of the government policy measure to ensure that there is no taxation of additional contribution in the hands of employees, so laws have been amended. On the same token, employer is now encouraged to contribute more. So, and therefore, there's a deduction. If you look on the right side of the screen now, it allows for an additional deduction. So altogether, there's 300% deduction. 100% is already legislated in Section 23 of the Income Tax Act. Any contribution made by the employer to FNPF is allowed as a deduction. The next 200% is being legislated in the regulation. So I think from macroeconomic viewpoint, it's more in terms of sustainability, trying to create a sound superannuation regime in Fiji, and also to encourage employers to pay. I mean, if they're willing to contribute more for the employees, they can do so. Then they are also given the 300% deduction. Now, let me summarize two important policy measures that was announced in the national budget, and that relates to the origin of the Income Tax Act 2015 and the origin of the Tax Administration Act 2009. These were two major pieces of legislation in Fiji. It has its own merits. I'm sure we can have a separate lecture, separate discussion on each of the laws, what has happened, what has changed, and what has not. But in the budget, there were two things that were being announced. First one is, if you look at on the left side of the screen, it's talking about mining tax regime. So Income Tax Act rewrite has introduced a very sophisticated, a very neater approach to legislate rules on mining operations. Mining operations, as we know, is highly capital intensive. It talks about exploration as a first step. It talks about production, second step. It talks about rehabilitation of the mine, which is like the third step. Within the taxation rules, within each of those stages, it differs. We're talking here about amortization. Somebody is holding onto a mining license, for example. Somebody came and explored the place and they discovered there's precious metal underground, for example. And now they're selling off that particular license to somebody who will actually come and dig and do the operation. So certainly it comes about amortization, deductions, and so forth. So the point being, Part 6 of the Income Tax Act provides a very clear set of rules, including the ring fencing rules. For example, if a mining operator is having 2 or 3 licenses, so the rule is saying that it cannot be consolidated into one. There has to be ring fencing rules. But equally, in terms of fairness perspective, this particular provision also provides what we call like indefinite kind of loss carry forward situation as well. So broadly speaking, this part of the law was in the law, but it was not active. So in the budget, we felt it necessary from the perspective of economic growth, development, mining sector. So there's need to activate this particular provision. The second one, which is on the right side, which is equally important, and I think that's something that maybe everyone is eagerly awaiting for in terms of further guidance and regulations and so forth, which is in the area of rulings. Rulings is very critical. I think rulings is an important aspect of any tax administration. It builds confidence, it gives serenity, it ensures even at the present time in Fiji, when FRCS is planning to roll out income tax self regime, and then we are always seeing high rates of penalties and so forth for non-compliance. On the same token, we need to ensure that we provide sufficient advice, sufficient quality advice, and advice that cannot be changed, and that's why it's called binding rulings. So at the moment, Tax Administration Act provides what we call legal framework for rulings. Rulings, what does rulings mean? I mean, at the present time, we see on FRCS website, we have what we call standard interpretation guidelines. So somebody can ask and say, what is a legal basis for that, for example? Because it can be argued that, well, 6 is good, and I think we are saying 6 is good, definitely, but ruling is one step higher than 6. Ruling is going to ensure that the advice will be published, it will be gazetted. So the point being, say for example, let's talk about a particular tax topic, say depreciation. So depreciation applies to all the taxpayers. How it's going to work out is, we know under section 30, 30 thereabouts of the Income Tax Act, we have depreciation regimes, and there is a straight line, and now diminishing value is also allowed. So somebody would like to know, how do we apply those regimes? How do we change? At what point in time we change? So those advice can come in what we call public ruling. It is public and binding. FRCs cannot go and change it. Similarly, the regime is having what we call private rulings. For example, like without naming names, I can give an example. For example, at the present time, we do have an inquiry like in terms of cryptocurrency. Somebody want to do like cryptocurrency mining in Fiji, and they want to know what is the taxation rules around that. Of course, broadly speaking, we do rules in place. It will be taxed under as ordinary income. But again, in terms of private rulings, in that particular example, which I'm to share with you, it will more in terms of how we define cryptocurrency, mining, and so forth. So that's just one example of like a private ruling. It's between tax office and the taxpayer. And it's called binding, meaning it can be changed. So the big picture issue is this. So what is the next step on this announcement? It has been announced. Definitely, it has been announced. Now, I think to make it happen, there needs to be there has to be two things. First thing, there has to be a commencement notice. So FRCS has been in touch with the Ministry of Economy and SD's office. So we are working together with the necessary legislative framework. Even as I speak to you, we are working to finalize the actual commencement date notice, when it's going to actually kick in. The second part is an additional regulation for rulings. For example, it needs to state the process, how rulings can be how rulings can be accessed in some jurisdiction, in other jurisdiction, and of course we have also seen advice coming from international agencies as well, that in order to manage the ruling process smoothly and fairly, there is normally a small amount of fee that is also being charged, so that rulings are more targeted. Rulings are the ones that is actually required to be ruled and things like that. But in any case, let's wait for the draft regulation to be discussed. But the good news is that rulings is going to improve our tax administration further, build confidence. Is going to ensure that there is no conflicting, or there is no reversal of tax decisions and so forth. Like I know that there is a objection process that we have, whereby decision can be reviewed, but it may take a longer process and so forth to reverse a FRCS tax decision. With rulings, it's more certain, more clear, and it's more transparent as well. The next policy announcement that I want to share with you before I try to move into customs changes, tax assessments. So tax assessment, as we know, section 3, also rather section 11 of the Tax Administration Act, it talks about assessments. So if you look at the whole grain of the Tax Administration Act, it is dealing with administrative matters, filing of return. It talks about assessments, talks about payments, talks about recovery, talks about objections. Anything on administration with FRCS on tax is mentioned in Tax Administration Act, and I think like the name itself says, is Tax Administration Act. So let's talk about assessment. So in the national budget, there was a view, like given the strong desire, strong need to support small businesses, or in particular micro, small and medium enterprises, we need to ensure that that our tax laws move in time to provide reliefs as much as possible. So in terms of relaxation of rules for tax assessments, so in this case, what we are saying here is that for MSME, and we are defining it to be $1.25 million of less. Of course, there is no one national definition at the moment on MSME. Of course, there's a desire to have that, definitely. What we can look at is the MSME concessional loan scheme that is currently being rolled out by the government. So it talks about a threshold of 1.25 million. To bring harmonization and consistency, we have brought the same rule here in tax assessment. So what does it say? It says that FRCS, in summary, can only go back for up to 3 years for to review anyone's assessment. For example, if there is an audit or there's an investigation of some sort, and it requires FRCS to, maybe based on some merits, to open the file and go back for number of years back. So insofar as MSME is concerned, FRCS can go only up to 3 years. But I think we need to also note with caution that Section 11 is talking about in case of any fraudulent, in terms of any serious omission, in terms of major tax evasion and so forth. So tax law is also be protected to ensure that in that case we can go back any year as we want to. But of course, from administration perspective, record keeping is only 6 years. But if we have to go beyond 6 years, way back in time, so in all fairness, so the burden of proof, the evidence gathering and so forth is a responsibility of tax office generally. Although if you look at Section 102 of the Income Tax Act that talks about anti-avoidance or general anti-avoidance rule, is very broad, very open, certain benefits can be removed and so forth. So that's like another discussion. But the point I'm sharing here is that this is a good amendment. Small businesses, FRCS will only go back for up to 3 years, and that is not only for tax, it's also in terms of customs law as well. In terms of value-added tax, there has been a few changes that was announced in the budget in the area of insurance. I think as a general rule, we do know at the moment, at the present time, that VAT is only imposed on general insurance in Fiji. When I talk about present time, I'm talking about, of course, prior to the budget, and even now as well. So VAT is only imposed on general insurance. And what is general insurance? It talks about motor vehicle, properties, buildings, and so forth. Life insurance is not subject to VAT, and that has been clearly legislated and articulated in first schedule of the VAT Act. What is first schedule of VAT Act? It is a schedule that simply provides a list of exempt supplies. So like in VAT language, we use the term supplies as opposed to sale. Supply is the main, is the backbone of VAT actually, supply. Everything is supply, mixed supply, zero rate supply, exempt supply, supply of this category, of that category. So anyway, that's another issue. The point here is that general insurance is subject to VAT. In this particular budget, what has been announced is that when there is an insurance policy being acquired by SME, fishermen, market vendors, and so forth, and the policy relates to the attempt is to protect themselves against any climatic events, any situation where they're going to sustain loss in the future because of natural disaster and so forth. So what happens is that VAT law has been changed to ensure that firstly, we amend first schedule to clarify that that is an exempt supply. So when somebody goes and acquires their insurance premium, basically parametric insurance, and maybe some may say, what is the meaning of parametric? Well, it may mean parametric, like it could be paranormal to some people as well, trying to understand what is that. So parametric is certainly, it is taking its cue from mathematics. It comes through some calculation, some evaluation in order to make some determination on insurance claims and so forth. But putting that aside, what we're talking here about, first schedule of the VAT Act has been amended to ensure or to clarify that there should not be any imposition of VAT. It is an exempt supply, so the insurance companies cannot register and able to charge VAT. But equally, or I would say conversely, if you look at Section 3 of the VAT, when we talk about indemnity payout by insurance companies, so what happens at the present time? So when an insurance company is paying indemnity payout to anyone, and that anyone is like a VAT registered taxpayer, so Section 3 says that that is deemed to include VAT. So VAT is part of that amount. Good. So indemnity payout by insurance company, they gave 100,000, for example, then of course, and it is given to a VAT registered person, then that includes VAT. But we do all know that we're talking here about small operators, market vendors, SMEs, and so forth. But there could be situations where we might have some of these players being subject to VAT. I mean, not subject to VAT; they are registered for VAT. And of course, as you know, the VAT registration rule, Section 22, is very broad. It provides voluntary registration. We special rules for produce supply as well. So the point being, a law has been sufficiently covered to ensure that there is no imposition of VAT on any parametric insurance premium. And when the indemnity, when the payment is received because of some losses and so forth, that is going to ensure that the taxpayer is not required to declare that an amount of VAT from there, because we've amended that. Okay, just very quickly, we have three policies in terms of tax deductions. But actually, I've already talked to you one already. That was to do with FNPF, 300% deduction altogether. 200% is the extra. 100% is already legislated in the law, Section 23 anyway. So we have three policies here on tax deduction. So what are those three policies? So firstly, it's talking about 200% deduction for investment in fogging machines. Certainly, it will be allowed as a deduction. And some of these machines, as we know, when we talk about machines or capital asset, generally it will have an element of depreciation as well. So those things will carry on. This is on top of that. So this is a 200% deduction. So we all know the impacts of it. A large amount of deduction is going to reduce like tax liability and so forth, or it may put the taxpayer into what you call tax loss situation, and that tax loss can be carried forward for a period of 8 years. So we do have tax loss provision in the Income Tax Act. I think Section 30 thereabouts talks about that. So the point being, that's one incentive. The next one is in terms of online platforms. So we're talking here about development or upgrade online shopping websites with integrated payment platform. So that is allowed. That is allowed as a deduction. The technical details of it, and of course, we all like to know what are the rules around that. It is in the regulation, and I'm going to share that those regulations with you shortly. So regulation is trying to provide technical details in terms of definition of certain terms, but as a matter of policy, 200% deduction is allowed. Then we have the next one on VMS, which is a very topical area and very important area. As you know, the whole story of VAT, as I mentioned to you, Fiji has adopted what we call low rate broad-based tax regime from 2016, and VAT is a classical example of that. What happened is that rates came down from 15 to 9, and the base of VAT has broadened because some of the zero rate items that were there has been scaled back, and some of the announcements around that was to ensure that we improve compliance, so that the moment we have an exhaustive list of zero rated supply, and I'm sure it's like as accountants, sometimes it creates complication and difficulty as well. If you are in a supermarket, what is zero rated and what is not, and when you prepare the returns, so things might not be properly accounted for. From tax administration perspective, it's more in terms of what we call ensuring that there's the rule of the game is simple, and there is greater compliance. So VMS was introduced, and it was somewhat rolled out in some sectors, and then because of COVID, from March 2020 thereabout, we had COVID response budget, so it was prolonged. The effective date has been prolonged, and in the last national budget, or the recent budget, the financial year we are into it at the moment, it has also extended that particular rule further with a particular incentive as well. So the incentive is that there is an encouragement for taxpayers to voluntarily come on board, which is good. I think VMS is, if you look at it, it's a good system because it also helps the business community to have good record keeping system as well. In some ways, it supplements that. But I do take note of the fact we are a developing economy. We have small businesses, we have big businesses, we have multinationals, and in order to comply, it's not easy. It takes support and guidance. And in that regard, I can assure the taxpaying community that any support, any advice, any assistance that is needed for everybody to come on board, we will be there to assist, and in a more flexible manner as well. But the big picture is that there's an encouragement for taxpaying community to come on board on VMS, and there's a 300% deduction as well that's being allowed incurred in the implementation process. We do acknowledge, we do know that some industries might approach it in phased approach. For example, we had met the hoteliers today, Hotel Association. So there is a desire that this thing can be done as an industry using phases. So the question is whether that is allowed for reduction or not. So just like I mentioned to you, there are one or two critical SIGs that we've already developed. We are currently in discussion with Ministry of Economy, and after this consultation today with the accountants, we had with hoteliers and few other stakeholders, then we'll be able to definitely have these things published, the SIGs published on FRCS website, and of course going through consultation on FRCS website by LES before next week Friday. So we have 3 SIGs, that is very important. Professional service fee, just to give further guidance and further education in terms of how it operates. The next one is what we call this 300% deduction, and we also have another one which is mainly for hotel industry in terms of the code 235. What is code 235? It allows for duty-free entry of goods for hotel, and then there are conditions that if those goods somehow gets resold or it gets disposed, but if in any case if it gets donated to a NGO and so forth, so we should be flexible to allow for that rather than having the duty recovered. Okay, in any case, so that is the issue on further clarification. I got 3 or 4 slides now. I think I'm at 3:10 now, within time. And it's good to know that we are receiving a lot of questions in chat platform, and it's good to also know that our panelists are replying on time as well. But rest assured, I'll run through the questions as well at the end of the presentation. In terms of customs changes, I think, as I have mentioned to you, a dramatic change, a paradigm shift has taken place last year in terms of customs. Actually, when you talk about tariff liberalization, or when we talk about trade liberalization policies, this is always a feature in any economy, because the whole philosophy of WTO, what you call economic partnership agreements and so forth, is for countries to reduce their tariff, so it creates market access. So everybody wants their export to penetrate into every economy, and vice versa. So generally it comes with the consideration of revenue loss and so forth, industry protection as well, because if everything is duty free, then it affects the industry because they create jobs, they do exports and so forth. Then on the other side, if everything is reduced dramatically, then there is revenue consideration. But I must say that in a more careful approach, in a more balanced approach, last year the national budget, the government has ensured that there is a reduction in tariff, and this budget has simply continued on the same principles. So maintaining duty rates announced in last budget. So there is assurance in the speech, in the announcement that has been announced, and certainly there is specific duty reductions for specific things. For example, Chapter 84 is talking about machinery. So all machineries at the moment is duty free, except 1 or 2 that is manufactured here in Fiji. And we have other chapters, such as Chapter 86 thereabout, that talks about spare parts. So if machinery is duty free, then spare parts needs to be aligned as well. And of course, we know that tariff has reduced either from 32% to 0, 32 to 15, 32 to 5, and so forth. So this budget has ensured that we continue to clarify things. And what you see on the screen at the moment, certain things as you see, audiovisual equipment, spare parts, electrical equipment. The important one that we need to know is what is in the middle of the screen in terms of dairy products. So what does it say? And you may be interested to know why we have effective date from next year. Why not from this year? So I think, as you know, that like dairy products is important, definitely. But from tax policy, from customs perspective of things, like there was a protection that was accorded to a local producer, because there was a need to ensure that we promote dairy industry in Fiji, and there was a continued drive towards that, and government has provided a lot of support in that regard, and there was a 10-year protection that was given to the industry, and that protection is going to expire by end of this year. So now, as a matter of transparency, as a matter of bringing clarity, so this budget has announced the tariff rates, and it has also been legislated. So this 5%, even though it's effective from 31 August 2022, if you look at the budget amendment for customs tariff amendment, it says that this particular item, the effective date is 31 August 2022. So it brings more certainty. So it is beyond an announcement. It has already been put into law. Well, although we know that the custom changes is generally announced in the budget and is carried from there. Okay, very quickly in terms of, as I have said to you, rather than reading everything on the screen, I can summarize it very nicely to all of you. So the approach in the design of any tax incentive, as I have said to you, the instruments are tax holiday, investment allowance. It also have what we call, it also have a range of customs duties. So where can we find the legislative authority for that? So all the customs concessions, as I mentioned to you, is legislated in Customs Tariff Act. When we look at customs, well, of course, generally when we look at customs, we may think of yachts, boats, planes, airports, into the border control. It's a very exciting area as well. But when you look at revenue side of things and trade facilitation side of things, we have to look at Customs Act. So Customs Act is an act that talks about import, export, and transit of goods or people. So it has got all the rules around it. Along with that, we have something called Customs Tariff Act. So Customs Tariff Act is a very thick book. I can show you one sample. So these are all the pages that you see. So many thousands of pages of book that gives us the tariff rate for particular item. And it's a technical subject matter as well. But the point being, at the back of the book, we have a number of codes, concession codes, goods that are subject to be cleared under concession code, or basically we have certain entities or certain individuals who are eligible for duty concession. So just to summarize it properly here, so in the national budget, there was introduction of new tax incentives that we have seen in my very first slide: ICT, network cabling, recycling business. So the legislative authority is in this code. So code 306 is talking about recycling business. Code 305 is network cabling and so forth. So there has been an increase in the code. The other point that I want to share with you is that some of the existing concessions has been also widened. The scope has been widened. For example, if you can pick one. So for example, 218. Anybody coming into Fiji and they bring things with them, they like hopefully one day border opens, we travel and we buy things, we bring it into Fiji. I think those days will come. It will come. But the point being that there's a duty-free allowance of $2,000. But now the law is being amended to ensure that it also applies to cruise, like the aircraft cruise and so forth. Similarly, we also have in terms of unaccompanied luggage. Somebody has just come in, but the luggage didn't come with them. It's going to come later or through another flight or through another arrangement. So that 2,000 that benefit should also be accorded in this situation as well. So broadly speaking, the major change of improvement or the major improvement in concession code is in code 235 because it affects the hotels. There are so many codes in customs. For example, let me talk some more. We have like code 228. It's talking about pleasure yacht. We have code 239 that talks about super yacht, and it provides with technical details and rules in terms of duty concessions and so forth. Okay, so that's great. So now let me conclude. I got 2 more slides before I conclude, and I believe I'm still on time. Yes, it's 17:03. So customs legislation. So as I have mentioned to you a while ago, what is customs? Customs essentially is import, export, transit of goods or people, and there is a strong connection of border control there, a strong connection of trade there, and of course with trade comes the revenue. So there's a part in custom tariff, or rather in the Customs Act that talks about duties. So Customs Act in an attempt to simplify and modernize customs operation and also to harmonize certain rules between tax and customs, a number of changes has been announced in the budget. I can give some examples. For example, if you look at, say, like the third last bullet point, it talks about assessment. So we have just talked about it, but that is only for taxation. But now we've also amended customs law to also ensure that that also applies for customs duty as well. So MSME, whether it's tax, whether it's customs, is given the support. And I can also elaborate here. FRCS is very much going to work with the industry. We have a dedicated MSME team within FRCS that looks after all the MSME queries. So we have a dedicated team that looks at incentives, that looks at applications, the implementation of the concessional loan scheme, and so forth. Because we do note that MSME is like a different it's like a different cadre, like a different segment, and we have to approach it in a different way. And if I can add up a bit further here for SMEs, under in Section 9 of the Income Tax Act, at the moment we do have what we call presumptive income tax regime. So in time to come, I'm sure with some analysis, with some advice, with some discussion, that provision might be implemented or will be implemented in time to come. That is a simplified system for SMEs. So presumptive income tax is this. So everybody in Fiji at the present time is subjected to same tax rules, same record keeping, profit and loss statement, balance sheet, cash flow statement, those financials, and have to go to the same tax returns. But presumptive income tax is an alternative to the income tax for small businesses. So rather than they go through the process of preparing all those financial reports to file their tax return, their tax can be presumed based on gross turnover. So we just look at only one number, gross turnover, and a very small amount of rate of tax, which is not in the law at the moment, it can be applied, so that becomes their income tax. So it does not become their sales tax, it becomes their income tax. So that means that they're immune from, or they're not required to go through the same rules and the same working of a normal income tax. So that is like a work in progress. It's already in the law, framework is there, just like we talked about mining, we talked about, we also talked about rulings. This is another one, we will talk about it. So the drive is to ensure that we're going to simplify more and more for SMEs. Very quickly, I got another 2 slides left. The point here is ECAL amendments. So as you know that for tourism sector, there was a significant reform in terms of ECAL. Rates had been halved for ECAL. The actual threshold has increased, which is very good for tourism sector in industry. STT that was working in parallel in some way similar to ECAL in terms of prescribed services is now gone. Departure tax rates have been halved. So in terms of this particular budget, we have brought in further clarity. I think one important point to note here is in terms of errors and omissions, for example, in terms of duty calculation, because of, as you know, that duty calculation is based on invoice, sometimes it's based on pro forma invoice. We have to wait for full documentation. But in the meantime, duty has been calculated and it has been paid, and that duty also includes ECAL, because ECAL is also imported on a number of imported items. So prior to budget, unfortunately, there wasn't any legal authority to allow for refunds where it was wrongly calculated and so forth, or some adjustments. What we have in Code 212, 218, and 219, basically, as I have mentioned, personal imports are exempted. So as we talked about, for example, we are coming from overseas. Hopefully one day we'll fly back in aircraft. We arrive at the airport, we bring our luggage. We were saying it's duty free, good, and VAT free. But what about ECAL? So I think now what we have done is we've also, if and where ECAL is applied, is to be also be exempted. So there shouldn't be imposition of ECAL. Like the another one is that I need to talk about, maybe I may be repeating here, is for tourism sector. Code 235 is a main concession code that is for tourism sector, and we FRCS, we have talked about implementation, and we had good discussion with the industry, and we'll also have good discussion with other sectors as well on other issues. But in this one, in terms of facilitation, so Code 235 is now also saying that ECAL will also not be imposed if otherwise if it was required to be imposed. So it's a very attractive policy framework. Just last slide in terms of restrictions. So as I have said, what is customs? Customs, import, export, transit, and within that we got tariffs. We also have what we call, when we talk about restrictions, we do have, there is an important regulation that is attached with Customs Act, and that regulation is called Customs Export Import Regulation. So it states on which items there needs to be a permit on which item it is like absolute prohibition. It cannot be imported, and we can relate to some of the example of the age limit of certain types of vehicles. It is absolute prohibited. It cannot be, even the goods arrived at the wharf. We don't have much opportunity to be flexible because law is very rigid, and it is therefore for environment reason as well, when you talk about those type of age limits. And again, I think government has also simplified certain rules along the way. It has been connected with the era of the fuel standards as well. But in any case, this one is talking about restriction. So if you want to know where in customs law, which place it talks about restrictions, in terms of where to get the license, where to get the permits, what is not allowed, what is not allowed, what about illicit drugs, what about guns, what about arms and ammunition, what about in terms of importation of motor vehicle, where it says that there has to be licensing arrangement and so forth. So that is there in that regulation. It's called customs customs import and export regulation, prohibition regulation. So legislation is on the website. The point here is that now, in terms of e-cigarettes, for example, that has now also been added to the list to ensure that there is a approval that needs to be obtained. The last point is it could generally be seen to be from the perspective of in terms of anti-dumping. So pasta, chips, noodles, biscuits that have a shelf life of not less than 3 months. So there is it has been restricted now. So the view was that if like some goods that are about to expire overseas and it is being brought into Fiji and kind of disposed here, so it's some kind of like anti-dumping rules that I'm saying here. So there was a good announcement in the budget to ensure that there are some restrictions on those. Okay, so with that, my presentation, we have come at 3:25 p.m. I think I believe I was on time. What I can do with you very quickly before, like maybe next 5 minutes, to also upload for you the revenue summary. So very quickly, in case something that you have read in the budget summary and you didn't see you did not see on my slide, because my slide was trying to be a bit more technical presentations on technical matters. So what I'll do, I'm going to share very quickly for 5 minutes, for the benefit of doubt, the revenue summary that came out after the budget. So it's very clear. So we have talked about ICT incentives. The details are there. The actual legislative framework is in the regulation for number 1. Number 2, regulation. Now you can see the threshold amounts. As I've said to you, tax holiday can go as high as 20 years. And if you look at, say, hotels in particular, there has been further tiers being created. Okay, we talked about recycling business. It's open to anyone. Anyone can apply, even if there's an existing business that wants to venture into a recycling business. So certainly an application can be made. There has to be basically a new entity, has to be a new tax identification number, a new process, and so forth. Then the rest continues. I've talked about the measures. Maybe the one that I need to talk about here is in terms of unit trust. So unit trust is something that is now been exempted. Actually, it was there in the old law, but we have looking at the submissions, budget submissions, and so forth, and the need to ensure that the tax regime in capital market is harmonized as much as possible as well. For example, we have shares, we have corporate bonds, we have even interest rate attracting a low rate of 10%, for example. But what about unit trust? So, and some of these shares, there is incentives. Dividend is tax-free. In terms of corporate bonds, last year's budget there was deduction and incentive for that. But what about investing into units? So I think to some extent there was a distortion. If tax incentive was not introduced in this budget, in my own personal opinion, there was a distortion in terms of the overall capital markets. So that's not being sorted out. So that has been done. I've talked to you about the online platform. Debt forgiveness is something that I've explained to you in more detail. How does it work? Number 13, exempt interest income. Essentially, what has been done is to bring further clarity in the law. The policy remains the same. So up to $30,000, as you know, that anyone deriving income in Fiji below $30,000 should not pay tax. Good. Then what about if somebody is deriving interest income in the bank and overall income goes below 30,000? So yes, we do have mechanisms. We have, if you look at our sections 112 thereabouts, we have opportunity for people to get a refund. So the point being, so that was a small technical change that we have done. Reorganization rules I've clarified. Excellent. So now we have widened the scope. It basically tries to ensure that we move hand in hand with the Companies Act. We support the growth in the corporate sector, company formation, and so forth. Deductibility for 300% on salary and wages for employees quarantine. So we had an incentive in the COVID budget, but now what has happened is we have expanded the scope of it. So now it also includes anyone who has tested positive for COVID. Unfortunately, my tested positive, and employer is now paying the salary. The mechanism for any tax deduction is this: any tax deduction. So it can be claimed as of right in the tax return. There's no need to get a prior approval from FRCS in terms of any tax deductions, because in the tax return form, there's a line. There will be a line with these new ones, and of course, as part of the validation and evidence, then there's a requirement that there has to be a letter just for verification purposes. And I'm sure I've seen for myself letters are being issued by Ministry of Health and so forth. So administration is not difficult. Rent, I think as accountants, we know that the moment we reduce rent, we are landlord, we reduce rent. So that is not like a deduction. It is not expense, but for tax purposes, that has been included. That has been recognized for deduction purposes. Whatever was the amount of rent reduction was allowed as a deduction in tax return prior to the budget. Now that amount is being doubled. So there is a 200% deduction. I've talked about the FNPF mandatory contribution and the tax rules around that. Number 18 is filmmaking and audiovisual incentive. As we know that we have a robust regime around that. Within the audiovisual incentives, we have film tax rebate, which is the key highlight of the incentive regime. So what it does is we do have a number of film productions that were shot in Fiji. It was we had movies shot in Fiji, produced in Fiji, and there was a need for refunds to take place. So national budget has given that assurance, has given that information that all the processing of refunds will continue. And definitely I can advise you, inform you that we are working very well with Film Fiji on this particular issue to ensure that we look at the application, the refunds and the claims and so forth. And in any number of cases, we have also given written approval or written assurance to say that this refund, this movie production, we have checked the numbers, all is good. And of course, numbers are checked together with Film Fiji, and refunds will be made in this in so and so sequence. Okay, right. So I think there are other. We have some administrative ones. I think when we look at number 4, it is an administrative matter, basically to improve our tax administration, improve our debt collection. So in the even after exhausting all the recovery actions and with all the evidence and all the facts, it has been established that the debt cannot be recovered. Maybe like the taxpayer has died or for any other reason. And after going through due process, due diligence, and so forth, and it has been established that the amount of debt has to be written off, then that is being now authorized to FRCS. And again, FRCS, again, we have to work in a more, this particular issue has to be approached in a more verifiable approach. There has to be checks and balances and so forth. But our Tax Administration Act also empowers us to reinstate debts in the event it is discovered that somebody's debt was written off and that person is around or he's converted his business into something else. As you know, under Section 43 of the income tax, or 43 of the 42 of the Tax Administration Act, the directors of the company can also be personally liable. For example, the companies in financial difficulties, there's a liquidation, company might profit, got liquidated, and the question is who will pay the tax? But this person has gone into formation of a new company. So the point is that that personal liability remains in the situation. So we do have recovery powers, but I must also say that recovery powers are being exercised with some caution, with some responsibility, with checks and balances. So taxpayers are given all the support in terms of if this is not to be reviewed. Okay, finally, I believe everything has been clarified. Right, so custom duty, there are specific line-by-line changes. I think it falls within the broader philosophy. So with that, friends, ladies and gentlemen, and members of the accounting fraternity, we are so privileged to be presenting to you this afternoon. With that, I hand over the session to Devika. Devika, over to you.
Thank you, DRM. I would like to now call Mr. Nailotei to do his presentation on taxpayer information system update.
Good afternoon to all, and thank you, Fazrul, for the extensive presentation regarding the tax incentives. Today, I'm just going to give an update on the taxpayer online services. Before I go on, I just want to thank the accounting fraternity. I want to thank the taxpayers for your support on the project. They started way back in the implementation from December 2019, and in the presentation today, I will just provide the update on the current live processes and some data on the taxpayer portal lodgements in terms of lodgements that come from the taxpayer portal. Important reminders, and I know we've been listening for around about more than 1.5 hours, and I will just go straight to the current live processes in terms of return filing. We got we got 12 return filing processes that's already live on the taxpayer online services, and the taxpayer requests. Just highlighting on some regarding the remission of penalties, number 6, the tax compliance certificate, and registration. For example, number 2, if you want to change your circumstances, changing the details, changing address, you can go to the taxpayer online services. Just before I go on, for those that have the TIN, for the benefit of those that have the TIN, you have to ask for your one-time login code if you haven't logged into the portal. For those that do not have a TIN, they just need to go to the login page and click on sign up, and they can also go inside. Also, the deregistration is already there. There's a 23 taxpayer request, and we also have objections, income tax concessions, and those that are listed there. The purpose of the presentation today is just to update all our those that are listening in this afternoon on the current live processes. Secondly, on the taxpayer portal lodgements, as we see, this is indication of those that have lodged lodgements or requests. For example, I'm concentrating more here on the return filing. From the taxpayer portal, we know that the pandemic for about 3 months last year, and also from April this year, there's more returns. The uptake on the lodgements from the taxpayer portal has been very encouraging. I want to thank the tax agents. I want to thank the taxpayers who are out there. Please, thank you for the uptake on the taxpayer portal, lodging from the taxpayer portal. As we know, the COVID restrictions that are in place, in line with the Ministry of Health and Medical Services guidelines, we are encouraging taxpayers to lodge from the portal, and I hope we can maintain this as we move forward. And important reminders, we are encouraging, please, your families, your wherever you have your circle of influence, please, as an extension of FRCS to promote the use of the taxpayer online services, that is the, you can go to the website under our portals, and you can log in from there, from the comfort of your homes and offices. So far, we have got more than 46,400 sign-ups. We encourage people to use, as I've already alluded to go on the taxpayer online services, because we are undergoing the pandemic, and it's also safe in terms of the services that we provide, and importantly, the customers that we are serving. On the updated information is very important. Please ensure that information is updated in any tax system. This is a challenge all over the world in terms of the information that is there. We urge taxpayers to update the information, and user guides for the processes already gone live, podcast, Q&As, and TPOS tutorial videos. If you go to our website, www.frcs.org.fg, please remember this, our services, you go to taxpayer online services, you got the connections there, the links, the buttons there to press, and these guides and podcasts, TPOS tutorial videos, they are there. And also for updated news, we updated on our Facebook page. I urge you today, if you are not connected yet, please make an effort to connect to our Facebook page to get in touch with the latest updates that we are doing. And also on the website, there's another place that's very important. Information and communication is very important. There's a news. You got the public notices, the text talk that's published in the two newspapers weekly. And please, if you this is important in terms of any issues. We know that we've been doing rollouts of processes. If we have any queries on the taxpayer online services, we've got the TPOS. I assure you that your emails will be acknowledged. In any business customer relationship, the acknowledgement, some of your queries, some of the issues that you face can be dealt with in the same day, some that require much more analysis by our team. We ensure that we inform you that we are actually looking at the issue, and this is an area that we are working strongly on. And if you email it to one of these two email addresses, I assure you that your queries will be attended to. And we've got key users all throughout the country that are looking to this. I know right now there are some working from home, but they are actually dealing with the issues as they come on board. I know with any online system, the support services is very important. And on the last note today, as we are about to head off to the weekend, I want to take this opportunity to thank all our partners that are out there, the taxpayers, the tax agents, the business community. We want to thank you for your continued support. And on that token, and thank you. Over to you, Devika.
Thank you so much, Willie. Since we have almost 15 minutes left, I will ask Mr. Rahman if he could respond to some of the questions. Mr. Rahman?
Okay, thank you very much, Devika. So certainly, I think it's good to see the engagement this afternoon, and we do have lots of questions. That's very, very good. And I do acknowledge that our panelists have also replied to some of these questions directly as well in the chat messaging platform. So if I can just quickly browse through maybe all the questions, and I can make some comments around that. So certainly, in terms of 300% tax deduction, the question is, what is the process for claiming the 300% deduction? Tax deduction for wages paid to employee quarantined or tested positive. So the process, as I have mentioned to you, it is basically the process is as of right. So what does it mean? Taxpayer can claim that in the tax return. There's no need to get a final an approval from FRCS before filing the return. Returns can be filed, numbers can be claimed, and that letter can be attached. I think that's the process, and that is for all the other deductions that we have generally. I know that for employment taxation scheme, there's another process in that regard where there has to be some verification because there are different types of employment taxation scheme regimes. But this one is very straight out: fill the return, attach the document, and entitle for the deduction. The next question is, I believe, right. If you can bear with me, I'm just scrolling and trying to read and put it out to you. Non-resident withholding tax on professional service, no deduction and remittance is required either on net or gross method to FRCS from 1st August 2021. Please confirm. Yes, I can confirm that FRCS is not going to impose professional service fee, withholding tax on professional service fee, were not permitted by the treaty. So definitely, we have seen situations with Australia and New Zealand, and I think that's where we have bulk of the transactions happening. So if we have, for example, if you look at the definition of professional service fee, which I have just mentioned to you for Australia, it includes, for example, accountants, architects, physicians, and so forth. So they provide professional service fee into Fiji. More technically, independent personal services into Fiji. So yes, to reply to that particular question, I can confirm, even as I speak, on the ground, this tax is not imposed. And FRCS has already issued a public notice with regards to with regards to the claiming of this particular refund. So yes, the answer is clear. I can confirm that there is no imposition of 15% non-resident withholding tax on professional service fee now. Thank you. Next question is, any invoices received prior to 1st August 2021 will not attract payment? So I think it's the same similar question. So essentially, as a matter of practice, so like at the moment we have resolved the dispute with Australia and New Zealand, we have stopped implementing this tax. But if in any case, if anything got implemented, say immediately after the budget announcement, there was an application with FRCS, and for some reason it got taxed, certainly that will be refunded. So the policy is that there should not be imposition of this tax, and whatever was being taxed has to be refunded. So that's the policy, and we're going to align and implement that. Okay, so that's a good question on that. Then we have recycling, regarding the recycling incentive and other incentives for that matter. Is there a pre-approval process, or does this look like, or how does it look like? So yes, so in that particular situation, so wherever there is a tax holiday being offered by tax law, the tax law provides for tax holiday regimes. So in that case, there has to be a pre-approval, because it's a tax holiday, it's a duty concession, it requires verification, application, and so forth. Generally, if you look at the process, there has to be a provisional approval, basically an application that has to be sent to FRCS to express the intent to undertake the activity and to get approval to start. So what is the strength of provisional approval? So somebody might say you have two approvals, provisional and final, is a duplication, and so forth. So the strength of provisional approval is that it will enable the taxpayer to enjoy the duty concessions, because before the tax holiday can be enjoyed, goods will be imported. It will require duty-free entry. So that's the strength of provisional approval. And as I mentioned to you, that has been legislated in respective codes in the Customs Tariff Act. So the process is that the process is outlined in the regulation, and the regulation is has been uploaded on the FRCS website, and certainly we'll share a copy of this to our industry partners as well. For example, we have shared with hotel industry. We'll share all the legislation, all the amendments to FIA, for example, all the tax agents. FRCS already have those network of contacts. So the point being, in this one, the process is that there has to be an application to show intent, verification, that will lead to provisional approval. The provisional approval, on the strength of that, duty free will be allowed for importation of things. Then the business is being established, set up. Then that will lead to the completion of the particular project, and then the start of start of the tax holiday. So when the project is completed, then the investor will make another application to FRCS to say that, yes, my project is done, everything is complied with, please give me final approval, because now I'm going to actually commence my business, commence the recycling business. And for that, I'm going to make money. I need to pay no tax on that, for example. So that will be a final process. So there is a process there, but the approach is to ensure that we simplify and make it easy. In our new tax IT system, which my colleague has mentioned, the application process has also been automated for tax incentives. So it will not require, and I can say the system has been developed. We have gone through it. The new ones will be added to that system. The point being that this bureaucracy, this administrative discussion with FRCS, it will all be automated now. It will go through the new system. Okay, very good. That's a good question. Thank you for that. Then moving on, after recycling business, let me see. We had a similar question on recycling business. I think I have answered that regarding the recycling business. Same question was sent twice. Is the reimbursement for 21 days of COVID leave announced in COVID response budget last year still in place? So certainly in terms of the tax incentive that were there, remains, and it has been extended to include patients, or rather including workers or employees that have tested positive, and employer is paying wages for that. So in summary, whatever tax benefits were there has been retained and actually has been expanded to include those that have tested positive. Okay, very quickly, the next question, next set of question. Okay, so if you can bear with me, I'm just trying to scroll and right. The question is, if an existing hotel has been given provisional approval last year, but no work was carried out as per the approval till date, can the hotel reapply for provisional approval given the percentages increase? Yes, certainly. If the work hasn't commenced, if under the old regime, as we know, there was a 25% deductibility for investment allowance. So an application was made and it got approved, but on the ground, no work has commenced. So definitely a new application can be made to FRCS. And now we have, of course, we have tax holidays. So that's more attractive than 50% investment allowance that has now gone from 25 to 50. So yes, the answer to that is yes, it can apply, and it will be assessed and will go to the motion of approval and will be approved when checklists are met. Okay, so that's good. Any further question? Debt forgiveness, the lending related party, after forgiving debt, will show this as an expense in the income statement. So in terms of the accounting rules, accounting standards, in terms of exchange of money on one side, when the loans are repaid with the interest, then of course that interest has to be taxed. It will be forming part of the gross income. And of course, on the same token, when something is being written off, then of course that goes to the motion of deductions. So over here, the policy is in terms of relaxing that to ensure that we don't tax it. Whatever is the normal accounting rule, accounting calculation, computation, one side is the interest income, the other side is somebody's interest expense. So those mechanics remains the same in terms of to be taxed and to be allowed as a deduction. Okay, I believe, yeah, some more questions coming up. Will development of marina qualify under tourism project HAIA? So definitely, if you look at the definition of hotels under the investment regime, the Hotel Investment Incentive Regulation 2016, definition of hotel has been widened. It includes integrated resort development as well. And so any amenity that is connected to the actual building or the hotel, hotel, like in traditional sense, could be a building where tourists go and stay, and that's it. But now there's integrated resort development, further amenities. Maybe it also includes development of lands, lots, and so forth. So yes, in that situation, marina and so forth, if it is connected with the project as a whole, definitely it will be eligible for the tax incentive, definitely. Okay, just few more questions left. Under debt forgiveness, company forgiving the loan gets the write-off expense. Certainly, the normal standard accounting rules continue to apply. Debt forgiveness is just like for a bank. They give loans, they generate interest income. Interest income is subject to tax, and we might have borrowed money and we paid interest. So that is our expense. And for example, a business has borrowed money. The principle is same. One side is a deduction, the other side it gets taxed. So the workings of those things remains the same. Okay, we have a similar question on debt forgiveness. So I'll carry on. Okay, sorry, there are 2 or 3 questions on debt forgiveness of the same situation. Okay, so debt forgiveness, as I mentioned to you, is captured in section 17, 1F, and we have within that we have 1 capital B. So debt forgiveness is, as a matter of policy, is part of, it has to be part of the business income. As part of the government policy in the budget, that will not be added, that will not be subject to tax, because the point is that that is now, if the forgiveness has taken place by end of next year, then it will not form part of the business income. It will not be taxed. But I'm sure we'll provide further guidance in our 6 actually how it works. For example, certain transactions might be within the associates, but might not be like a debt situation. It could be a situation of fringe benefit tax. It could be a situation of like loans and advances paid to directors. So there could be certain differences. I'm talking here about commercial debt, borrowing between A and B. So because when you look at associates, it's not only the borrowings, it could be some other expenses, some other payments being done, which forms part of the fringe benefit tax in the FBT rules as well, or it can be part of the rules in the index of dividends. Of course, at the moment, dividends is not taxed, so it is not an issue. But the point is that if you want to understand the mechanics, the fundamentals, the technical details of debt forgiveness, in certain scenarios, in certain situation, it may not be part of that particular section 17(1)(f). It may be part of FBT rules. Okay, good questions. Non-resident withholding tax. So what I can confirm to you, please make applications. SIG is going to give further clarity. We have already issued a public notice to state that FRCS is going to commence refunds process. And even as I speak to you, we have refunded a couple of millions already, and there are other applications as well, because we already had a list with us for non-resident taxpayers from ITO, because we were in touch with ITO being the competent authority for Australia, and so we have processed. So this is an evidence, an example to show that we are processing things, we'll get it done. So please make an application, write to us. We can always meet you. We can meet virtually as well. Definitely, we're going to ensure that we facilitate, we assist you all the way. Okay, so that's great. I believe the next set of questions is also on non-resident withholding tax, similar issues in terms of timelines for resident taxpayers. There's no restriction of timelines. If somebody has paid, from our research, from our knowledge, this imposition has started in 2014. So if you receive applications now, as a matter of policy, then that has to be refunded. But we do acknowledge if anyone who is a non-resident, for them to come to Fiji to get a refund, they have to come to the mutual agreement procedure, which is a standard procedure that is there in double tax treaties. So in that one, whatever will come to FRCS from ITO and New Zealand IRT, because so that in a way, it really validates the claim. It brings some credibility in the whole process that the claim is genuine. Claim has is to be allowed. Because ITO and New Zealand IRD, they look at from the perspective, or the taxpayers look at from the perspective that if they are not being allowed a credit in Australia or New Zealand for the tax paid in Fiji, then that will definitely trigger a discussion from the taxpayer with the tax office in those countries to get a refund. And I think a number of taxpayers have approached us. Okay, right. So I think just trying to wrap up quickly. I think we're approaching a 4 o'clock mark, but questions are similar. Withholding tax, please make application, email us, and so forth. If you think you still need some discussion, we're going to issue another public notice in order to clarify further in terms of the timelines. There's no timeline in terms of the domestic, and we'll make reference to mutual agreement procedure that has timelines. And actually, that is a matter for the other tax office offshore. But as a matter of clarity, we'll mention that. But that is so. While that is coming on board, applications can still be made. We'll still process. It still will still be refunded. Okay. Right. Professional service fee. So somebody has asked, will the SIG outline the criteria for distinguishing between professional service fee and royalty? Very good question. So the answer is already in the tax treaty. We'll simply uplift it and put in the SIG, because we do have royalty that attracts withholding tax. For example, if there is a software service that is being obtained, and some may argue it to be a professional service, but that is being paid as a royalty for the use of the software. So that will be part of royalty withholding tax. And I think we had one interesting case. Somebody was arguing to say, or was suggesting to say that the director's fee is also a professional service fee, and so forth. So we had those type of discussions already, but certainly as a matter of clarity, it's our responsibility that we explain in more detail. And I think in a PowerPoint, which I have just I was showing, I had simply showed Article 14 of the treaty, and there was a definition, and we'll upload that for everybody's information. We were just waiting for this consultation to complete so that we understand other issues, and then we are in a position to publicize our SIG. But be rest assured, by next week, this will all be done. Okay, right. So I think we had 4 o'clock mark. Similar questions on treaties. In terms of tax amnesty, does tax amnesty also apply on backlog lodgements? So tax amnesty essentially is if there's a debt sitting with FRCS, somebody is owing debt, somebody is owing tax. FRCS is in our books. And now the opportunity is to come and settle the debt, because it must have triggered penalties. Penalty will be waived, and of course, provided the tax is paid. If an assessment hasn't been raised yet, so definitely that will not warrant any amnesty, because it has to do with debt. A debt is there, is sitting in FRCS ledger, it's in the books, it is generating penalties, and is going to give an amnesty. But if there's a backlog of returns and taxpayer feels there will be generation of some penalties, so we already have powers within our Tax Administration Act for taxpayer to make time to pay arrangement with FRCS. We already have that power. So certainly that will be welcome, and we'll talk on case by case basis. As you know that under the COVID response, there was a major policy announcement on that. So taxpayers were given more time to pay, more time to lodge. But in a situation where an assessment is to be raised, is going to trigger some penalties, and taxpayer feels that there has to be some consideration, reliefs, and so forth. So definitely we have powers to look at that on case by case basis, and we'll do that as well. Okay, so the good question. Right, so I believe what is the FNPF percentage now for both employer and employee? From our reference to the amendment to the FNPF Act, in the budget, rate is 6% for everybody, employer and employee. Okay, right. So I believe that fairly answered the question. Good. Some people have replied back to what I have said. Right. So certainly we will provide email address. We will provide email address for further email for further inquiries, for further clarification. I was just trying to look through some of the final comments. Same thing. There's a question on amnesty. Amnesty applies on all penalties, including lodgement and payment. That's true. So It's on all penalties. I think the fear was that perhaps the audit penalty will not be brought into the equation. So the point is that it will be brought into the equation, because if you look at the legislative drafting for that particular section, section 48 capital E of Tax Administration Act, it starts with the word notwithstanding anything in the act. So notwithstanding anything in the act, so that clarifies the doubt. But in any case, when you talk about audit penalty, section 46 already has that discretionary power for CEO to, and of course, looking through the working through the normal checks and balances, power to waive the audit penalty or reduce the penalty. Corporate reorganization, the company, will CGT charge on transfer of assets from a subsidiary to parent, and what constitutes a company? Good question. So certainly, when the ownership, the structure is same. Section 88 talks about a group company. So answer to that is yes, CGT will be deferred, and of course the main condition is that the shareholding structure, the ownership holdings remain the same, 100% in OWL and 100% in parent and subsidiary, same ownership. But certainly if there are technical issues within that in some setup, so we can provide you specific advice on that. But generally, from the experience that we have in FRCS on this particular issue, we have accorded approvals. Okay, so thank you. I think just last few comments. So this means SMEs will have to retain records for seven years. Maybe that might have been asked in the context of the assessments. So the 7-year rule at the moment, it applies to all the record keeping rule applies to all the taxpayers. The assessment is only for 3 years. Assessment when FRCS can go back for 3 years. So certainly the point being that the record keeping rules remains the same. That's to maintain record, and even the presumptive income tax. If you read the presumptive income tax section 9 of the Income Tax Act, it says that like taxpayer can be part of presumptive income tax because he or she is unable to maintain records. So I think there is that flexibility in presumptive income tax. The moment somebody wants to opt out of presumptive income tax into mainstream income tax, then they can only do so when there is when they prove that they have sophisticated record keeping system. But this is for the future. Presumptive income tax, maybe I can only talk about the law. It's in the law. There is no effective date, but I can explain about the intention, and if and when it will be activated, then the main issue there is record keeping. So if small businesses, small taxpayers, generally record keeping, it's a cost. Basically, it's a cost of compliance, cost of doing business to maintain all those records. So that's why the presumptive income tax is a regime in the law that is yet to be activated. When anytime in the future when it will be activated, then certainly that record keeping requirement will be waived, as what we have at the moment for everybody. Okay, so great. I believe questions are coming in. If a company gets a tax holiday, does that company still have to pay VAT? Good question. If a company gets a tax holiday, does that company still have to pay VAT? Certainly, if they are meeting the VAT registration rules under Section 22 of the VAT Act, and of course the registration rules connects with the taxpayer is carrying out a taxable activity and so forth. And taxable activity is also defined in the VAT Act. What does it mean? So VAT operates in a different silo, and income tax holiday is in a different silo. Income tax, we look at the Income Tax Act provisions. VAT, we look at the value added tax provision. And to answer your question precisely, if anyone who meets the condition of Section 22 for registration, they should be in the VAT system, even though they might be enjoying a tax holiday. And actually, VAT registration is a good thing for business because they are in a position to claim back the VAT they have paid. Otherwise, it becomes a cost to them because they have to absorb the input tax. Okay, so I believe we just need wrapping up. There are a lot of questions coming on board. Does tax amnesty also apply on backlog Okay, I think I've answered that. Sorry, I've answered that. So whatever is a tax debt and is attracting penalty, that will be waived. For the purpose of non-resident withholding tax, does professional service fee includes accounting and audit services? Yes, certainly. If you look at that independent business, Article 14 of Double Tax Treaty with Fiji and Australia, for example, it talks about accounting services, it talks about architectural services, it talks about medical, some element of medical is there, physician, and so forth. So certainly the answer to that is in Article 14 of the double tax agreement with Australia that clearly defines what is a professional service fee. Right, so I believe we're coming to the end of the discussion. The question is on the binding ruling regulation is currently being finalized and should be ready soon. Yeah, okay. So there's a question on when this binding ruling things will be activated. I can give you some comfort that we are in touch with the Ministry of Economy, and as this office, we have got draft rules ready. We have discussed, we have finalized. It's just going through the process of some final discussion with Ministry of Economy and as this office to ensure we put it out. But certainly it's coming. It has been announced, so definitely it's coming, and we'll work with the stakeholders to ensure that we implement it properly, because this is something that will require consultation before anything gets published, before anything gets gazetted. There has to be a framework, there has to be consultation, there has to be discussion. So we're going to ensure that those things remain. Okay, so right, so I believe all questions coming to an end. Tax amnesty, same question. If a taxpayer has a number of filing obligations on the portal VAT FBT, so that applies for all tax types, essentially. Amnesty. I think one thing we need to know is that in terms of trust taxes, so somebody is owing, somebody has uplifted PAY and forgot to pay to FRCS, so that's like a separate matter. We're talking here about income taxes. Generally, income, a person has made a profit was subject to tax, and for some reason the taxpayer was not able to pay up, so that's okay. But now amnesty is given to settle with the penalty waiver. Okay, next one. What is the procedure for apply for refund for non-resident withholding tax? So certainly the procedure is that an application, a letter can be sent to FRCS, addressed to CEO FRCS with evidence to say that money was deducted. If there is some records, information, whatever information is there, we do know that some of these transactions might have happened in the past. The level of documentation might not be there, but if whatever is there to validate and prove that money was deducted, and of course we'll validate it from our own IT system as well. So definitely that will be allowed. The application, the procedure is to make an application. There's not a particular form, because the form itself will take a time, and of course the information will be different for different types of professional service, the amount and so forth. Simply a letter attaching evidence, documentation, and we'll ensure that it gets processed. Okay, great. So I believe we have some final custom duty concessions. So custom duty concessions, yes, has been legislated for the gold card taxpayers that are now going to see import VAT being the payment being deferred for 2 months. That has been activated in the system. We have programmed the actual tax identification number in the system as well, so it is automatic. There's no need to feel that it will go through some bureaucracy, some checks and balances, some approval before goods can be cleared. No, it is already in the executor world system. As we know, that custom executor world system is a world-class system developed by UN Trade and Development Group. So certainly we have factored that in. And in terms of bonded warehouse, the law is saying, the policy is saying that it is applicable to the compliant bonded warehouse operators. So how do we define compliant? So FRCS compliance team, we look at the history of bonded warehouse operators. If there was an infringement, if there was a serious omission, if there was an issue, issue in terms of infringements and so forth. So that will not help, unfortunately, to be in the zone to enjoy this deferral. But in any case, the point is that in terms of administration for customs concessions and duties, it's all automated. There would be documentation, of course, when somebody is applying for tax holiday. Approval is to be given, prior approval, provisional approval rather, and that is going to help to enjoy the duty concession. But I must say that there has been vast improvement in the administration of custom duty concession. Before, we had pages and pages of approval that has to go to Minister of Economy in the past for it to be approved. Now we have introduced codes in the tariff. So all these Section 10 approvals, as we say in Section 10 of the Customs Tariff Act, that provides the authority to waive tariffs on certain goods, certain industry, and so forth. Now it has been legislated in the law. It is now part of codes. That's why we have so many codes. So when custom officer in the front line tries to clear the goods, they look at the code, and in the code we have in the code the conditions are written. For example, the approvals, documentation. So process has been very much simplified in that regard. Okay, so I believe questions. I think that takes me to the last. Right. Residents in Fiji and under Australia, New Zealand, Fiji DTAs, these are not subject to non-resident withholding tax, FRCS 10. So there's a question. So as I'm saying, the article 14, say for Australia, it clearly says that the taxing rights rest with the resident country. And when we say resident country, country of residence, where does the taxpayer belong? It does not rest with the source country. So that particular article is saying that if we are dealing with a non-resident from those countries, say in this case I'm talking about Australia as a reference point, so and they are deriving income in Fiji, and that income is professional service fee, which is defined in Article 14 of Double Tax Treaty, then we cannot touch that income for tax purposes, because Double Tax Treaty allocates taxing rights based on 2 or 3 conditions. Either we can tax all, either we can't tax anything, or either we can share the revenue. So that's why interest, dividend, royalty are shared revenue. Both country of source, country of residence share the revenue. So when the taxpayer goes back to his or her country, they are able to get the credit because treaty allows for it. In this case, residents for these countries for this type of services will not be, we cannot tax that. And I think that takes us to the bigger issue, broader issue. And I think that's not only for Fiji, but for any country around the world in terms of trying to protect their or secure their tax base. The argument is that income derived in your territory, you cannot tax it, it goes somewhere else. But we have to look at beyond that. The whole philosophy of double tax agreement is to encourage investment, is to encourage trade. So simply losing few dollars in revenue, it will be offset by bigger issue in terms of investments. And I can say that there are a number of investors who were waiting for this announcement to be done, this decision to be made. And now I'm sure now it's a clear go ahead to come and invest in Fiji. We already have some bilateral discussion with ITO last week, few weeks ago, 2 weeks ago, we met ITO officials, bilateral discussion, FRCS and ITO are having bilateral discussion. And we also discussed this issue. We also communicated, we shown them the evidence, we changed the law. And so the point is that it is all done within the ambit of treaty, and there is no particular issue that is under dispute at the moment. Okay, so I believe that's great. So I think now I'm coming to the end of the function, the seminar, webinar. So certainly, I think there are some positive comments and there are some constructive comments on TPOS. I think TPOS is important. We have to do it right, and I think I must say that we already had very good discussions with tax agents. System needs to be simplified further, made more relevant, more useful, remove duplication, especially in CIT and PIT modules. And I can confirm that there are discussions that is happening. We had discussed with the taxpaying community, and certainly all the comments are valid, even though it may be a criticism. But that's true. We in FRCS, we take on board. We have to improve, and certainly there's assurance we can give you that your contribution is very valuable in the design of the new system. So far, what we have rolled out, and I can say that application for tax clearance certificate, application for tax compliance certificate, remission of penalties, and all the modules that has been rolled out. Now the level of the level of complaints have reduced, because there were some initial teething problems and so forth, even for VAT as well. In terms of customs claims, there was some issues around that. So those matters has now been resolved, and we will have to work with you. The whole system is good for you and good for. We are in the same team actually. So the point is that we have to design the system properly, so it does not create cost, does not create bureaucracy, and so forth. So we take note of those concerns, and in the design, in further discussion, we're going to ensure that the FRCS management team takes on board your comments. Okay, so I believe that was the last question from what I could see on the screen. And I believe our panel members have also replied to some of the specific queries. Right, so I believe, so that brings me into the question. So what we'll do, we'll compile all these questions, and then we'll do a particular text talk article. We do some kind of communication for tax paying community. We also had sessions with other stakeholders. Now we are picking up issues that requires a bit more clarity, a bit more information. So whilst our SIG is going to take its course, we're going to have more awareness and more engagement. In addition to what we have had today, we're going to have some more sessions like this, and we'll partner with the industries, not only to impart knowledge to learn, but also to see where FRCS can improve. I think there will be situations that you will know certain things has to improve in FRCS. We like to know, and definitely we can work together to reform that. So with that, Devika, I think we are approaching 4:30 mark now. I'd like to conclude my presentation, and in conclusion, once again, I'd like to thank the tax-paying community, the accounting fraternity, and everyone who is here in the audience. I'd like to thank you for being part of the discussion, and we'll work together to continuously improve both the tax policy as well as the tax administration. So thank you very much, and all the best. Be safe, and have a good evening. And over to you, Devika.
Thank you, DRM. And thank you, ladies and gentlemen, for joining us this afternoon. So with this, we'll close our session. Thank you.